Everyone's watching the drop. Palantir falls 9.3% in a day, and suddenly every genius online thinks the company's broken. But here's the uncomfortable truth. Most people holding this stock have no idea what they actually own. They saw the chart go vertical, they chased it, and now they're panicking because they never understood the business. This is how weak hands get punished, not because the company failed, but because the holders were never built for volatility in the first place. Right now, you're not being tested on your stock picking. You're being tested on your conviction. And if you don't know what you believe, someone else will decide for you, probably at your expense. So before we talk about profits, margins, or growth, there's only one question that matters. Do you actually understand the asset you're holding, or are you just hoping the line goes up? Let's find out. When a stock runs 385% in a year, it paints a bullseye on its back. That's what happened here. Palantir went from underestimated to unstoppable, and Wall Street doesn't like what it can't control. So they do what they always do. They wait for an excuse, a pullback, a tweet, a moment of weakness, then they pounce. Let's be clear, this drop wasn't about earnings. Palantir just posted 48% revenue growth, 93% US commercial growth, and a 94 Rule of 40. That's not just impressive, that's dominant. But none of that matters in the short term when a stock gets too hot. This isn't about the business anymore, it's about expectations. And when you're the best performer in the S&P 500, every hedge fund and short seller starts circling. What's happening now is a momentum flush, not a breakdown. Just a shakeout of people who never had a plan, never read the earnings, and never understood what this company is building. Palantir is not being punished because it failed. It's being punished because it succeeded faster than the market could price in. And that makes people nervous. Everyone's crying about the valuation. Good, you should be. Stocks don't trade at a 490 PE because they're easy to understand. They trade there because most people don't know how to value power. Here's the truth. If you're trying to run discounted cash flow models on a company that just redefined operational AI, you're using the wrong tool for the job. This isn't a steel mill. This is infrastructure for the next generation of decision making. It's not supposed to be cheap. You want cheap? Go buy a dying business. You want durable? You're going to pay up for a company that's stacking multi-year government contracts and locking in sticky enterprise clients across the board. Palantir isn't just selling software. It's selling time, certainty, and capability to the most demanding institutions in the world. That's why it's pulling 57% free cash flow margins and sitting on $6 billion in cash. You think that's hype? Show me another company that's scaling this fast at this margin. Yes, it's expensive because it's winning. And winners don't go on sale until they stop winning. This isn't 2020. This isn't a bet on potential. It's a bet on execution. And right now, the scoreboard is flashing green across every metric that matters. If that scares you, you're in the wrong stock. You see, most people don't get it because they've never seen software do this. Back in 2011, before ChatGPT, before AI was a talking point on earnings calls, Palantir helped track and kill Osama bin Laden. Their platform stitched together satellite intel, human signals, and financial movement across agencies. It wasn't theoretical, it was tactical, and it worked. That was 14 years ago. Today, NATO, the largest military alliance in human history, runs its mission command platform on Palantir. Real-time battlefield awareness, operational planning, intelligence fusion across 31 countries. When Russia moves troops, when a cyber attack hits infrastructure, when missiles are in the air, Palantir is the brain behind the coordination. So now let me ask you, how do you replace that? You don't. You don't outcode it. You don't hire a few engineers and spin up a clone. You don't swap it out like a CRM. This isn't software. It's infrastructure, embedded, mission critical, built into the DNA of how nations operate in the modern world. And when the stakes are life and death, war or peace, survival or collapse, this is the system that gets the call. This isn't hype. This is what dominance looks like. You see, Palantir didn't crash because the business got worse. It crashed because the price got too high for people who never understood what they were holding. Let's be clear, the numbers didn't break. They got stronger. Revenue up 48%. Profit margins hit 33%. They raised guidance across the board. Total contract value exploded. But one tweet from a short seller and suddenly retail is in full-blown panic mode. Why? Because most investors still think like traders. Here's the truth. The stock ran up fast. too fast. And when that happens, the narrative flips. Momentum traders bail, profit takers lock it in, and hedge funds start circling for blood. It's not about fundamentals, it's about fear. When a stock's up 385% in a single year, you don't need a reason to sell. You just need a headline. The market didn't reject Palantir's results, it punished the price. That's a big difference. So now the question is, did anything break in the business? No, the only thing breaking is weak conviction. Let's get real. If you're uncomfortable holding a company with a 490 PE ratio, I don't blame you. This isn't a value stock. It's not safe, it's not stable, it's not buy the dip and sleep easy. It's volatile, it's aggressive, it's expensive. And if Palantir misses a step, this thing can drop 30% before you even hit refresh. That's the reality. Yes, they've got a moat. Yes, they're profitable. Yes, they're growing like crazy. But no company grows at this pace forever. Eventually, the law of large numbers shows up. Margins compress, growth slows, and when that happens, the multiple starts to shrink. But that doesn't mean the price crashes. It just means the company has to grow into what the market already priced in. Wall Street still doesn't know how to value this company. It's founder-led, it doesn't fit neatly into their spreadsheets, and it refuses to play the earnings game they're used to. That makes them uncomfortable, so they discount it. So yes, if you're uncomfortable with risk, Palantir is not for you. If you're looking for stable, predictable, dividend-paying, then move along. But don't confuse volatility with weakness, and don't call it overvalued just because you don't understand what it's becoming. Here's how you know if you actually have a thesis. You know what would make you sell. For me, it's simple. If growth stalls, if margins compress, if deal flow slows, if execution slips, I'm out. But until that happens, I hold because nothing in the business has changed. There's a difference between noise and narrative. The noise is a bad headline, a bearish tweet, a red candle. That stuff doesn't matter. The narrative is the long-term direction of the company, and right now, it's still pointed straight up. But let's be clear, this won't last forever. The insane growth, the surging excitement, all of that will slow. It always does. You don't get rewarded for ignoring that. You get rewarded for recognizing when it's actually happening. That's why I watch fundamentals. That's where the truth lives. Not on a chart, not in a comment thread, in the earnings. That's where the real story is written. And right now, the story hasn't broken. The business is still getting stronger. The product is still sticky. The momentum is still intact. So I'm not selling, I'm watching. And when the data changes, I'll change, but not before. So let me give it to you straight. Yesterday's drop didn't shake me, but I'm watching closely because while the business hasn't changed, the sentiment has. And when sentiment shifts, you get pullbacks, sometimes deep ones. Palantir broke its 20-day EMA. That's a real signal. Right now it's hovering just above the 50-day EMA. If that level breaks, the next support zones are $138 and $125. That's not fear, that's fact. And if we get there, I'm still not selling because I'm not in this for the day-to-day candles. I'm in it for the long game. And the product is still elite, the moat is still expanding, the contracts are sticky, the cash position is strong, and the fundamentals still trending up. So I'm holding, not because the charts tell me to, but because the business does. But let me be clear, this isn't a guarantee. This isn't buy the dip. This is a test of conviction. If the 50-day holds, great. If it doesn't, I'll watch how the company responds, not how the chart looks, because price is just noise. Execution is signal. And if you're nervous, I'll ask you one question. Who's Palantir's competition? Exactly. That's why I'm still here and why I'm staying. Air Tractor is a pilot in my Patreon. He's been with me for 5 years, through crashes, rallies, fakeouts, and full-blown bear markets. Why does he stay? Because it works. Last month, he pulled in $17,135 in realized profits. And that wasn't leverage, that wasn't YOLO options. That was just his cash account. Let that sink in. Most people watching this wish they made $17,000 in 30 days, let alone in a disciplined, duplicatable way. And what did he do with those profits? Roll them into his IRA and physical metals. That's what real wealth building looks like. Not guessing, not gambling, execution. That's what this channel is about, and that's why I built my Patreon. Everything you just saw, the breakdown of Palantir's moat, the EMA levels, the risk-reward profile, the bullish and bearish thesis, this is how we operate every day. No emotion, no fluff, just real data, real strategy, and trades built on conviction, not hope. Inside my Patreon, you get real-time trade alerts, entries, exits, and the logic behind every move, daily market updates, focused on clarity, not headlines, long-term strategies so your account grows even when the market whipsaws. It's $30 a month. People burn that on DoorDash. But this could change the way you invest for the next decade and how you live the rest of your life. So if you're serious about this, join my Patreon. If not, keep scrolling. Just don't say you weren't told.